Welcome to Guts, Passion, and Winning, a show where we connect with the people who have the courage to walk off the beaten path, people driven by conviction, people who intend to succeed in their mission. I'm Inika Chakarmane, and we are joined today by Mr. Monish Anand. Mr. Monish is the founder and CEO of Datasigns Technologies, which does credit assessment, lending, and risk management. The company's product, Shubh Loans, addresses unserved borrowers and provides them with fair and transparent credit using an app and an automated backend. Hello, Mr. Manish.
Hi, Anika. Thank you for inviting me on your show.
Thank you for being here.
Yeah.
So, starting with a rather basic question, what was the core essence of your business?
So, Anika, I'll give you a little background and I'll throw some numbers at you. If you look at India as a credit market, we are the second largest consumer finance market in the world, second only to China. So there are about 400 million people, and this is as per Omnidia network report. There are about 400 million people in this country who apply for loan every single year. Unfortunately, only 1 out of 7 manage to get formal loans. So balance don't get formal loans. They still have requirements. They still need the money. So they go to options are to either go to friends or family, or worse, go to a loan shark. So large consumer finance market, but also very underserved. Yeah. So if you look at a loan to GDP ratio, we are somewhere around 17% or 18%, depending which report you read. Compared to somebody like Thailand, they're at 60%. Malaysia is getting closer to 40%. So it's a large market, but a very underserved market. And that's where we saw white space. We felt the credit needs to be more democratic. We felt that everybody has a right to credit. They should get a chance of a fair credit. It should not be in the hands of very few people. And that's the core essence of a company, to make sure that everybody gets credit. Everybody gets a chance to get credit, and it's democratic.
And what are some events that have led to your business's growth over time?
Well, there are 3 reasons why we are thriving, why we're existing and why we're thriving. One is, if you look at, so we are a completely mobile-only lending platform. We only lend on mobile. We have no story on web. Our entire story is on the mobile. So we have an app called Shubh Loans, which is which is an Android app. It's a small 5 MB, optimized to work on a 2G network kind of an app. The first thing was that the mobile market in India has become the second largest market in 2016. So 2016 we crossed US as per IAMAI report, and we're the second largest mobile market. So everybody has mobiles in India, right? And by 2020, 100% of the mobiles which are going to get sold in India are going to be smartphones. Today you can buy an Android phone for as low as $20. It may not be the fancy Samsung Galaxy phone, it's a mobile phone, smartphone, all right there. So that's one change. Number 2 large change which is happening is that data in India is no more disparate. It's become much more homogeneous here. Thanks to India consent architecture, thanks to Aadhaar, which is virtually becoming your social security number, right? The data points are easily available, right? So one can optimize the data to reach out to a larger population. And third is that there was a real need for credit. And so these are 3 things which have helped us. So it's almost like as if the universe is connived and got together to help companies like us, flourish and grow.
And what are some basic principles that have guided your business?
Well, our basic principle has been that, number 1, that before anybody applies for a loan with us, first thing they have to do is they have to build their credit score. We feel that what can be measured is what can be improved. So we don't give, there are 2 parts to our lending. One, that you build a proprietary Shubh Loan score, understand where you stand on a score of 1 to 100. Why 1 to 100? Because Indians understand the percentage concept better than any other concept here. But that's how school scoring works, that's how everything works. So first step is that they should understand where they stand on 1 to 100. Number 2, not only understand where they stand on between 1 to 100, they should also know what components have gone in building this score. Because that's empowering part of it here. And they should know this in their language. So today we are present in 8 languages. See, Nika, the credit has been happening for millions of years. It's not something which is new. It's just that it's got complicated. Bankers have made it complicated. The lenders have made it complicated. We want to decomplicate it. We want to make sure the person who's taking credit understands what they're doing, what components are there in the credit, what can they do to improve their credit score, right? And so those are being I think, the main essence there. So generate a credit score, understand what has gone into it, and then apply for a loan. And that's what we call responsible credit.
And what's something that happened to your business that took you by surprise?
Well, there are a lot of myths which have got busted. So see, I'm a banker with about 20 years of experience behind me. So when you start something at what people probably say it's a wrong age, I started a business post 40, and that's the time when people start planning for retirement. So you get into your business with certain ideas, and we've seen that in last 1.5 years, as we look at data, because we're a very strong data science company. We probably have the best brains in the world making sense of data, and a lot of myths are getting busted. I'll give you something very interesting. So one of the things which typically the bankers use to assess credit is that if you spend more number of years in a job, you have probably a better credit than somebody who's a fresher, who's just starting off. Our data says otherwise. Right? 40% of our customers today are new to credit. That means they're taking the loan the first time. They're performing on the delinquencies better than those who are come back for a second or third loan, who are bureau tested credit here. So there's some very interesting data points which we've been discovering as we go along here.
And what are some past patterns that you believe will repeat themselves?
Well, I see the fundamentals of credits haven't changed, which is how you really credit assess an individual. It's still about assessing a capacity to pay and assessing the intention to pay. Right? So those fundamentals remain the same. And how you do those, how you assess those have changed. Right? At the end of the day, it's still about capacity to pay and intention to pay. But thanks to your digital revolution, we are discovering new ways and new avenues to essentially, assess these two parameters. But these parameters are repeated patterns there.
And what are some things everyone seems to get wrong about being an entrepreneur?
Oh, that's a tough one. Well, I guess, when you're an entrepreneur, one of the things you have to keep in mind is that the people who you work with, right? And remember that what I said is who you work with, not people who work for you. And that's one of the very fundamental difference in thought process, that you work with people. And number two, that you have to hire people who are smarter than you. Right? And you have to constantly learn from them. Right? And you have to give them enough headroom, enough space. In my company, how we work is that there are some very smart people. We have about 18 people who I work with, and each one of them are very smart. We give them enough headroom. And we tell them, as long as what you're doing is ethical, as long as what you're doing is towards one common objective of your loans, you're allowed to do anything you want. Experiment as much as you want, and be ready for a change. Right? Let the market tell you, and you have to be nimble enough to respond to the market. So when we raised some money last year, and one of the things as an entrepreneur you have is that you want to take a larger office, you want to take a fancier office, but we eschewed all that. We said we're not going to do this because we still want to be seen and feel like a small company. We don't want to feel like a large company now, because the moment we start feeling like a large company, we start behaving like a large company, you won't be nimble enough here. So one thing is that conserve. Don't be very, you have to be prudent with the money which you have. I think number two thing which is very important is that all entrepreneurs go through what they call FOMO, which is this fear of missing out. And there are going to be opportunities which will come your way. But you have to sit back and assess what you want to take on right now and what you want to take on tomorrow. Because you work with limited resources. And so you have to sometimes just wear halter and say, listen, I want to be focused on what I'm doing. Yes, there's so many things coming my way. As of today, I need to be focused on what I'm doing. Maybe tomorrow, those opportunities I'll pick up. So you be very careful about what opportunities you take on right now and what you need to probably plan for tomorrow.
And in what ways has your business been a collective effort, both inside and outside of the firm?
Oh, I think it really takes a village to what we are doing. It's not something which I could have accomplished alone. Inside the company has been, of course, the fact that we have people who come from eclectic background. So we got technologists, we got sociologists, we got people with banking background, right? We got people with UI UX kind of a background, right? So one is, of course, that. Second, outside is that you need regulatory bodies. You need also the government support in terms of what you're doing. So it is a sum total of everything which is happening inside and outside there. And for a company to really succeed, so for example, we wanted data scientists. We wanted a chief data scientist for a company, and we realized that we couldn't find some very good data scientists in India, because in India I saw there were a lot of data engineers, but data science as a subject is much more evolved, in countries which are outside India. So we found a chief data scientist in US. He was a tenured professor at the University of Wisconsin, and he came and joined us, our team, as a chief data scientist. We recently hired our head of data analytics from a very large firm in UK. So what our thought process is that it'll take a village to really achieve what you need to do. So you have to go beyond every single border and find people here.
So getting a little more specific, what would you do if some borrower just cannot pay?
Well, one of the things which we do, we offer something called a portfolio management services. So we handhold a customer till the time the last EMI is paid. But then, there is always a risk involved in terms of the fact that sometimes the borrowers don't pay you back. And now they may not pay you back because you failed to assess the capacity correctly, or they may not have paid you back because you have failed to assess the intention. They may have the capacity, not the intention. Right? In both cases, there are options which are available. I mean, in terms of the fact we reach out to them, we do dunning, we do calling, we do door knocks and meet the customers to understand that what is really, how we can help. Maybe they need their loan to be restructured, need some help, right? We provide those kind of loans. We don't provide those kind of helps. And the idea is that if somebody has been deviant, how do we get them back onto the track? We tell them that loan is something which is no more a four-letter word. It's going to stay with, you may require loan in the future also for other purposes. So if you're going to default right now, you're closing a lot of doors for the future. So there are a lot of, it's a process. It's a process, but I think default, the whole idea is that defaults are not going to go away. Right? The idea is how you can minimize and keep them under a certain trigger.
And where do you get your money from to do the lending? And how easy and scalable is the raising of that money?
Yeah, so we actually have a rich man's problem that we have enough balance sheets on which we lend. We are an asset-light model. So, one of the things which we realized early on is it's very dangerous to make a statement in a fintech space, which is our space, or a health tech space, saying that, listen, I am going to come out with something which is going to shut down the banks, or I'm going to come out with something which is going to shut down the hospitals. I think how it applies to us is that for us, banking and the traditional lenders, they have the capital, we have the technology. So what we have done is we have partnered with 9 of our lenders, which are of all different hues. They're microfinance companies, they're banks, they're non-banking companies. And they supply the credit, they supply the line of credit to us. We use our technology for risk assessment, we use our technology for acquiring the customers, for risk assessing the customers, and we use the capital of our partners to basically facilitate the loan. So we have enough line of credit, enough capital available to us. And over a period of time, what we see is the capital is going to become like a commodity. It'll become fungible. Any lender can come plug themselves onto a platform and say, listen, I want to lend $10 million, $20 million, $50 million, right? Using your tech. And that's what we've seen. We've evolved. From when we started off, we had one lender, which is sometime in March 2017, and today we've got 9 lenders, and these 9 lenders are very, very large banks and non-banking organizations.
And you assess the risk of lending. Can you talk to us about the kinds of data you work with to be able to build a picture that lets you decide whether someone would pay you back or not?
Yeah. So see, all the data which we collect, what we do is that there are 2 pointers. There are 2 things we were trying to assess at the end of the day is the capacity and intention. Yeah. So there's financial data which we collect. Of course, there are 3 levels of consent which are taken from the customer. In fact, customer has to facilitate that data to us. It's not something which is taken without customer's consent, right? And second is also some non-financial data. When we started off, almost 90% of a credit algorithm was dependent on the financial data and 10% on non-financial data. But as we have gone along, it's been about active 15 months of lending. This ratio has changed to 70-30. So 30% of our today, data is non-financial data, which has an impact on the credit score. It's a very eclectic data. We believe that you cannot look at only somebody's bank statement or only somebody's what is data on the phone, or look at their Facebook post, or look at what they're doing on SMSs and build a credit score. It cannot be only one. You cannot do that in isolation because the signals which may come to you, they may be unstable. So we look at data from various sources, combine them into one algorithm, and then generate a credit score and do the risk assessment. So it's a combination of financial as well as non-financial data. Our goal is that as we go along, the non-financial data should become a larger part. We should be more signals should come up from non-financial data. Because tomorrow, if somebody, let's say, who's selling coconut on the road, somebody who's selling vegetables, a vegetable vendor, he wants to apply for a loan or she wants to apply for a loan. They have one, of course, the Aadhaar, because there are more than 1 billion Aadhaar numbers which have been issued in this country. They have mobile phones, because mobile phones are becoming cheaper and also data plans are becoming cheaper. So everybody has a mobile phone and Aadhaar. But they may not have enough financial data. So what we want to do is that we want to make sure that our algorithm is skewed more towards the non-financial data. So when they apply for a loan, even if they don't have financial data, we should still be able to credit assess them based on other data.
And how do you stack up against microcredit institutions, and do you see them getting into your space?
Well, see, so I'll give you some interesting numbers here. So the total consumer finance market as of today, purely consumer finance market in India, is about $287 billion. Okay. This does not include your SME and corporate finance. I'm talking about completely consumer finance. Now, so it's a large, $287 billion is a large number. But the question is, who is really consuming this $287 billion of credit? So we divided India into 5 parts based on the income and based on the consumption. So on the top, we said there are people who have a household income of more than 20 lakh rupees per annum. And we said we call them elite. Second bracket is somebody who has an income of 10 lakh and 20 lakh household income per annum. We call them affluent. Third bracket was somebody with an income of 4.5 lakh to 10 lakh. We call them aspirers. Fourth was somebody with an income of 1.4 lakh to 4.5 lakh. We call them the next billion. And the last were those who were making less than 1.4 lakh household income per annum. We call them strugglers. Now, if you look at the top two segment, which is people drawing salary, people drawing making income money with household income more than 10 lakhs, which is the elite and affluent, though they are barely 10% of India's population, they consume 70% of this $287 billion. So 10% of the households consuming 70% of the credit here. So it was not evenly distributed. So our segment is essentially the aspirers and the next billionaire. The segment for microcredit guys is strugglers. So if you have to divide between banks, NBFCs, us and microcredit, the top segment aspirers and affluent, which is today consuming 70% of the credit, is where all the banks, NBFCs are focusing on. That's the reason, 70% of that segment today has some loans or the other running here. Right? And that's where 70% of India's credit is going. The bottom is where the microfinance companies are focusing, which is on the strugglers. Right? Where the middle, what we call missing middle, which is the next billion and the aspirers, is where we are focusing. Now, our focus market is where we see a white space here. Because by 2025, as per Craig Suez report, this $287 billion market will become $1.2 trillion market. It will grow by 4 times. But 50% of that 1.2 trillion will be consumed by our segment, which is aspirers as well as your next billionaire. So that's a white space we see, and that's the one white space we're focusing is. So we are somewhere below bank and NBFC segment and above the microcredit company segment.
And there's a lot of action in fintech and consumer players, and there are businesses like Paytm which must have large installed bases. How would you deal with the competitive threat should they get into lending?
No, so Paytm has got into lending. As a payment bank, they cannot lend, but they partnered with other organizations for lending. I feel that this is not a one winner takes it all market, because market size itself is very large. Right? We see ourselves as a technology company which is offering risk as a service. Right? And our goals is very focused lending. For us, lending probably is one of the things which they do. Right? For us, lending is the core thing which we do. But you're right. The fintech space in India. I don't know if you know this. When the e-commerce started about 10, 12 years back, or maybe more than that, there were about 2,800 e-commerce companies in India which had started. And you know how many are left. So now also there are many fintechs. So I was doing some study, and I could bucket about 178 fintech consumer lending companies. 178. Each one of them with their own version of truth. Some very good ones, some not so good ones. Right? But what I could see is that bulk of them, and I would say more than 90% of them, are still focusing on the segment where banks and NBFCs are already providing credit, which is the affluent and the elite. So they're saying you want to buy a mobile phone online, we'll give you finance for that. You want to buy a new iPad, we'll give you finance for that. Right? What we feel that their lending is more for consumption purpose, more for discretionary use. Number two, the segment is where the credit is not the need. The friction-free credit is a requirement. Because credit is available there. Because banks and NBFCs are providing credit there in that segment. Only thing is that friction-free credit is required there. So that's not the segment. Our segment is entirely different. In our segment, credit is a fundamental need. Then there's a friction-free credit. Right? So that's the difference in our approach. So if you look at 4 top reasons for people taking loans from us, it's repaying old loans which they've taken from loan sharks. So they want to do a debt substitution by taking a lower interest rate loan. Second is for medical purposes. Third is for education. Fourth is rental deposits and marriage. Because in a city like Bangalore, for example, specifically, rental deposit is a large chunk. It's about 10 months. It's a rental deposit in maybe marriage. So if you look at the needs, of loan, the reason for loan from us is more of a non-discretionary than discretionary.
And can you share with us some information about the technology stack you work with? I'm asking from the point of view of a student to try and understand what the industry is using currently.
Yeah, so it's very fascinating that I think in technology, when it comes to technology, experience, number of years you spent, is of very little relevance. Because technology itself is evolving so much that some of the new technologies we work with, which is on the data science side, or we're talking about technology like Python or Angular. These were not even there till about 5 years back, right? And these are some very new recent technologies. Interestingly, we had some interns coming from Malayarati International School, and they did about 2 weeks of internship with us, and one of them actually built a chatbot. So so that's how the technologies. So we R is a pure cloud lending kind of a solution. So our entire stack is on the Amazon cloud, right? We enable a whole lot of new set of technologies. It's more of a mobile technology because ours is more of an Android based lending, right? And we have a stack in the back which is more geared towards the data science there.
And what are the skills you think will be in demand in the future? Is it hardcore math? Is it the application of machine learning libraries, or is it just general programming?
I think data science as a field is something which is very, very fascinating to me. I think data is democratic. Anybody can get any kind of data. Right? How to make sense out of the data is going to be the critical in the future. So data science is something which I'm quite bullish about. When it comes to machine learning, I think machine learning is a logical process. I mean, for example, when we started earlier, there was a lot of human intervention in our business. Today, we are virtual credit managers because machines have to learn from a logical system. So you have to set the logical system first, and then the machines start learning it, right? And then the outliers go to the human. So I think data science is something which I'm fairly very bullish about it.
And is there any advice you'd like to give to young people just starting out and trying to figure out what they want to do?
Yeah, I think one is don't be too hard on yourself. I mean, I think I wanted to be a pilot. I wanted to be in merchant navy. At some point of time, I also went and for internship for chartered accountancy, which I quit exactly in 48 hours. I hated it. Right? So you will figure out what you're really cut out for, what your really calling is. Yes, you may start something, drop it. May start something again, drop it. Doesn't matter, but you will figure out. But don't ever lose the spirit, and don't be scared. I think the fearlessness is very critical. Everything can be overcome if you're fearless here.
Thank you so much, Mr. Monish, for taking time out of your day to talk to me.
Thank you so much, Anika.